Tiffany, thanks so much for joining us here at SuperReturn Europe. Great to have you in our studio.
Thank you for having me.
And you're talking on a panel specifically about GP stakes, something
Yes.
that you've obviously been involved in for a while, but it's suddenly gaining a lot of traction. Tell me about that and why you think that's happening.
Yeah, well, GP stakes is certainly still a niche within private markets, but I do think it is becoming less niche or more mainstream from both the GP and LP perspective. There have been, we get asked a lot about, there's been quite a few new entrants to the space, but there's still, if you compare it to other parts of the private markets, sub-asset classes, there's still, a relatively small number of players, maybe a handful and a half or sort of regular players in the space. So from a, competitive landscape perspective, we have been doing this the longest, and we focus on the largest end of the spectrum. So, we partner with GPs that on average have about 25 billion in assets. They've been around on average 25 years. It's big equity checks. Our funds are large and much larger than our peers. So from a competitive landscape, it hasn't really changed. But I think what's been really, exciting and helpful, frankly, particularly in Europe, is that for, the past decade, there were sort of 3 or 4 main players. And now with these newer entrants who are coming in, they are smaller, they're newer, but they are out also evangelizing LPs and educating GPs on the merits of the strategy. So that is just very helpful to walk into a conversation with an LP and not have to sort of spend a huge amount of time explaining what is a GP stake and strategy and what are the merits of that.
So more interest. What is it that's driving that interest?
Yeah, so I mean, I think, if you look at the 2 main benefits of investing in a GP stake strategy, it's really yield. What we are trying to do is deliver to our LPs a really strong private equity return, but in a very DPI and yield oriented way, so that the cash flow starts very early and it's quite consistent. So it's yield and it's diversification. Each of our funds, and this isn't unique to us, every GP stakes fund just has, immense diversification across asset class, strategy, geography, enterprise value, and vintage. And I think those 2 characteristics, particularly in an environment now where LPs are often liquidity constrained and are seeing less distribution and less DPI from other parts of their portfolios, it ticks quite a few boxes. And that on top of the fact that given ourselves and a couple of our peers now have a decade or more of track record, I think it allows LPs to also just be more comfortable with this somewhat different strategy.
Because that is exactly what people are looking for in this sort of environment is a new strategy, that diversification as you described it, and this is part of that picture. And it is a big picture. There are lots of different strategies that people are looking at, but
Yeah.
you're part of that.
Yeah, absolutely. And I mean, I think we have all types of investors. We have an extraordinarily diversified investor base by type, by geography, insurance companies, pension funds, sovereigns, families, increasingly, not surprisingly, participation from the private wealth segment. I think what's exciting for GP stakes players is just the spectrum of LPs that's looking at it now. And whether it's those, ticking those boxes, or also, we're speaking to a lot of LPs who are newer to private markets, and they are building out their portfolios. And this incredible diversification can be a really nice anchor to a portfolio that sort of in one shot provides LPs with, as I mentioned, this wild diversification, but also allows them to sort of almost backfill past exposure with that vintage diversification, almost time travel backwards, and really, help mitigate the risk in a new portfolio.
Because we are in a very different environment to what we've seen in the past 2 decades of private capital, and that's a fact. The last 5 years have been harder. So has that been a reason, do you think, for a drive in interest, as you say, for new incumbents to look for people who've got that track record, who've been through the cycles, who have that sort of vintage, as you put it, in the market?
Yeah, I mean, I think LPs they have, in some cases, less capital put to work. They have a lot of options. So they're certainly looking for GPs that rates may be higher, there's geopolitical risk, but looking for GPs that have navigated through, a decade or decades of that. And when I think we have always, as an investor in a GP, we have always felt that the larger end of the spectrum is sort of the best risk reward to play. And I think the past, 5 years of tougher fundraising, tougher financing, has really reinforced that view that that these GPs have navigated through these cycles before. We believe, of course, there are like great opportunities for top performing smaller GPs, but as an owner in the GP itself, we feel that the larger, more established, diversified GPs will continue to disproportionately benefit from sort of the growth of the industry going forward.
So moving on to talk about relationships, this is a relationship business.
Yeah,
the relationship between those GPs and LPs is crucial in those sort of deals. Tell me about that and what both parties are looking for in that picture.
Yeah, I mean, these are, when